problem 7, and then we can talk about 8 and see if you have any specific questions about it. (23-7). On page 1388, you see a comparative balance sheet. Now, this time they gave us the balance sheet. It's not the trial balance, so we don't have to worry about going to the debit section to look for debits and the credit section to look for credits. All the accounts are listed there. And they've even broken them out for us between current assets and non-current assets, thankfully. So that's a little more work, a little less work for us to have to do. Then on page 1389, you see the income statement. And by the way, this company's year end is May 31st. So they've got a little unusual year end. And then you see the income statement on page 1389. Now, the kind of thing I would do if I were doing this problem, like for homework, I would find, do you see interest expense? I would highlight that $75,000 in the income statement. Depreciation expense, I would highlight that because that's something I'm probably gonna need. Okay, and then I'm gonna look at the additional information. All sales during the year were made on account, okay? Number 2, all merchandise was purchased on account, and that comprises the total accounts payable account balance. Then in part 3, it says plant assets costing $98 were purchased by paying $28,000 in cash and issuing 7,000 shares of stock. All right, so the cost was $98,000. No, I'm sorry. You say you bought some, so we don't have to do what I'm doing. But I do need to, it says plant assets is it, so 502 to 600. All right, so so that helps us understand that we bought $98,000, but you only paid $28,000 in cash. And so $70,000 was the issuance of stock. So that portion is non-cash, right? Okay. Number 4 says the other expenses on the income statement are related to prepaid items. Number 5 says all income taxes incurred during the year were paid during the year. They didn't have to tell us that. And then in number 6, it says in order to supplement its cash, Chapman issued 2,000 shares of common stock at par value. Okay? So another account, this is the first time we've had to worry about this account, is the common stock account. Looking at the balance sheet on the previous page, common stock went from 280 to 370. Okay? Now remember, we already know 70, oops, I'm sorry, I just did that wrong on my side. 70 was related to the purchase of plant assets, which was non-cash then, right? So 280 plus 70 gives me 350. So how much? 20,000 was issued for cash. That makes sense? Okay. And then let's act like we don't see number 7. We don't want to know. Because I'm not going to tell you on the exam. Cash dividends of $105,000 were declared and paid during the year. Well, let's look at retained earnings, 120 to 145. Okay. Well, we know that retained earnings should change by the amount of net income for the year, and net income was $130,000. So if nothing else happened, 120 plus 130 is 250. The balance in retained earnings should be 250. But it's not. It's 145. So 105,000 happened on this side, and they tell you, what they should tell you is cash dividends of an unknown amount were declared during the year. Then you figure out the amount. Then you also have to figure out, were the dividends paid? And I believe it was Mr. McCall last week who told us, or on Tuesday told us, if they haven't been paid, then we would have dividends payable on the balance sheet. So let's look. Do we have dividends payable on this balance sheet? No. Therefore, we know they were paid, right? So that, I'm trying to get you to start thinking about, I'm not going to tell you the amount of the dividend. And I'm going to tell you that it's declared. You'll have to figure out the amount and whether or not it was paid. Sometimes they don't tell you the amount and they let you figure it out, and then several of them, they give you the darn thing. I mean, be consistent. Make you figure it out every time so you can have several opportunities to figure it out. You with me? That makes sense? A says compare and contrast the direct method and the indirect method. I don't care about that. B says prepare a statement of cash flows for the year ended May 31, 17 using the direct method. Be sure to support your statement with appropriate calculations. Well, we're going to have to do that to come up with numbers. We're going to have to calculate, so that's not going to be a problem. And it says a reconciliation of net income to net cash provided is not required because in Part C, they want us to calculate the operating activities section on the indirect method because the other two methods are exactly the same. So they just want us to do the indirect method. Operating activities on the indirect method. Now remember, to get 100% of the points, you have to have a 3-line heading. Okay? Name of the company, name of the statement, and for the year ended May 31, 2017. All right? So then within the body, it's cash flows from operating activities. Now this one is the direct method. The one we did before the other day was an indirect method, and you start with net income. Under the direct method, what do you start with? Cash collected from customers. All right, now, what is the income statement item that you go look at related to cash collected from customers? Sales. Current year sales. Okay, so look on your income statement. Current year sales 1,255,250. Then we go to the balance sheet and we look at changes in the related balance sheet account. And the related balance sheet account in this case is change in accounts receivable.
So I'm going to ask them to put like the change, like the delta.
Yeah. Anything I do on the board you can do. All right, so let's go to accounts receivable. Look at it. It went from 58,000 to 75,000. That looks like 17,000. So I'm gonna put 17,000 here. Okay, now, accounts receivable went up. So that means cash went down. And we're solving for cash collected. So is this positive or negative?
Negative.
Negative, very good. Okay? And then we need to look at accounts receivable written off. Okay? Do we have an allowance for doubtful accounts? I don't see it. I mean, it would be up there with accounts receivable, right? Do you have in an account right there with accounts receivable? No. Plus, in none of the additional information do they tell us what your write-offs were. Therefore, there's nothing, I mean, we don't have the data. The reason you say, well, why is he even doing that? Because the next problem you do on the direct method may have that information, and I want you to get used to looking for it. Okay? So now, we're gonna take 1,255,250 and subtract 17,000, and that's gonna be what?
1,238,250.
1,238,250. Okay? Now, so watch this. We're gonna go over here. 1,238,250. And that's positive. That's money that came into the company, so that's a positive number. What's the next thing we do? Cash paid to suppliers. Okay, now, flip that switch in your mind, because now, instead of cash collected, it's cash paid. And now don't underline in your, I mean, it's not supposed to be underlined when you prepare the statement of cash flows. I'm just emphasizing, in the first one, you're talking cash in. For these next four, we're talking cash out. So now we gotta be focusing on, does this increase cash out or does it decrease cash out? Okay? For cash paid to suppliers, what do we look at on the income statement?
Cost of goods sold.
The current year's cost of goods sold. So go to your income statement, top of page 1389, 722,000. Okay? So we start with that as our starting point. Then we say, what are the balance sheet account or accounts that are related to this?
Accounts payable.
Inventory is the first one I will do. Plus or minus change in inventory. Okay, so go to your balance sheet. Inventory went from 250,000 down to 220,000. Guess we could let Miss Toomey do the math for us in the calculator, or we could just say that's 30,000.
I had it written down before you did.
You did it before. Okay, good. All right, so, well then help me, Miss Toomey. 30,000, am I gonna add it or subtract it? We're solving for cash paid.
So you're gonna subtract it.
Subtract it, because an asset went down, so that means cash went up, and you're solving for cash going out, so that's not going to add, that's gonna subtract to cash out. Okay? And then, is there another balance sheet account that's related to this?
Accounts payable.
Accounts payable. So plus or minus the change in accounts payable. So go to your balance sheet in current liabilities and look for accounts payable. It went from 115,000 to 123,000. That's 8,000. Okay, that's a liability going up, so that's cash going up. So is this added or subtracted? Subtracted. Good. What is this, 684?
Yes.
Now watch this. We create a new column because we're gonna add the 4 deductions over here. And I don't have to put it, look at this, some people say, well, why don't you put that in parentheses? If this is positive and this is cash going out, why don't you put it in parentheses? Well, look, cash collected from customers. The description tells you that's cash in, right? Cash paid to suppliers tells you this is cash out. In your financial statements, when it says income tax expense, do they put it a minus and put it in parentheses? No, because they already say it's an expense. I'm going to deduct it in getting to net income, right? All right, what's the next one? Cash paid for operating expenses. Okay, so go to your income statement. All right, I have salaries and wages expense, $252,100. And then what about the interest expense I'm going to do separately? The depreciation expense, if I added it in, I'd just turn around and subtract it out because I want cash paid for operating expenses, so I'm going to leave it out. But what about the $8,150 and other expenses?
Prepaid items?
That's related to prepaid, so that's related to operating expenses, so I need to add that in. So what is this, $260,250? Is that right?
Yes.
$260,250. How we doing? Okay, now, what are the balance sheet accounts that are related to operating expenses? Well, Ms. Toomey said one a minute ago, what? Prepaid, because they tell you prepaids are related to operating expenses. Or, no, they tell you other expenses is related to prepaids. So we gotta look at prepaid. So look at your balance sheet. In current assets, prepaid expenses went from 7,000 to 9,000. So that's a change of 2,000. Ms. Walker, an asset going up is cash going out. So do I add that or subtract it? Add it. That's right. Okay? What else am I going to do? What other balance sheet account might be related to this?
Salary and wages paid.
There you go. Plus and minus salaries and wages payable. So look at the change in salaries and wages payable. 72,000 down to 47,250. 24,750. 24,750. Okay, that's a liability going down. That's the same as cash going down. So we're going to add that to cash paid. Everybody with me? Okay, now I'm going to take a moment and look and see if I can think of anything else. We don't have bad debt expense. We don't have allowance for doubtful accounts. So I think that's probably going to be it. So, somebody please.
282, 250.
282, 250.
Oh, wait.
No, that's
Yeah, it's
wrong.
287.
I'm tripping.
287. 287.
It's 287.
287,000 even. cash paid for operating expenses. Okay? All right, part of this is memorization. What is the next item that we should look at? Cash paid for interest expense. Okay, so we go to our income statement and look for interest expense, and I see it as 75,000. Okay, then I'm gonna say, do I have prepaid interest on the balance sheet or interest payable on the balance sheet? I do have interest payable. So, I'm gonna try to do this. We start with the 75,000, and then the change in interest payable was from 25 to 27, that's 2,000. Am I gonna add that or subtract it since the liability went up? Subtract it. So that will be 73,000. Okay? And what's the last one? Cash paid for income tax expense or income tax. Okay, go to income tax expense on the income statement, and that's 43,000. Okay? Do we have DTAs? No. Do we have DTLs? No. Do we have income tax payable? No. Therefore, it's 43,000. Okay? So let's add the 4 negative adjustments up. And what are they total?
1,087,000.
And so what is net cash provided by operating activities?
151,250.
How much?
151,250.
151,250.
Yes.
Questions? Okay? So now what do we do?
Go to investing activities.
We gotta label that first, right?
Yeah.
Net cash provided by operating activities. Okay? All right, now I've got some room, so watch this. I'm gonna come down, cash flows from investing activities. Okay? This relates to non-current assets. Looking at my balance sheet, I only have one non-current asset, and that is plant assets. And I've already got the plant assets T account up here. And the only thing that happened in this one is I bought some for cash and I issued some stock. So the only thing I need to put here is purchases of plant assets. How much am I gonna do?
28,000.
Huh?
28,000.
28,000. Now watch this, watch this. This number is gonna go here. And then I'm gonna put it on a line by itself right there. Because I have to label it. This is the answer to my section. Look, is this the answer to the section?
No.
No, so I don't label it anything. This is the answer, so I label it. This is my answer, so I gotta label it. So that's going to be net cash used by investing activities. Now I'm getting too low, so I'm gonna go back up to the next, but imagine where it would be. Cash flows from financing activities.
So for the ones before, when we said cash paid for operating expenses, we don't do the, parentheses, but whenever it's like used in like to purchase, that's when we do them.
Yes.
But it explains it still.
Hmm?
It just doesn't make sense to me, because it says used, so it's the same ideology behind not using them for pay.
Well, I'm trying to help you when you get ready to combine these three, not to add it,
Yeah. Makes sense.
right?
Because you can come up with a positive number there, we did stuff
Well,
like
yeah.
that.
Right, it could be a positive
You would
number.
use
And then it would be provided,
Yeah.
okay? All right, now what are the things we need to look at in financing activities? Just think, don't look back at your notes. What are the two categories of stuff?
Equity and.
Stockholders' equity and non-current liabilities and all notes payable. Okay, so look, let's do non-current liabilities first. Do we have any non-current liabilities?
Yes.
What do we have?
Bonds payable.
Okay. Bonds payable went from 100,000 at the end of 16 to 70,000 at the end of 15. Okay? How are you going to describe that, Mr. Rollator?
I'm sorry, I was writing something. What did you ask?
I'm wanting a description for the 30,000. I can't just put bonds payable, because that's not telling the reader anything, is it?
Cash paid to retire.
Okay, retirement of bonds payable. Or repayment of bonds payable. And by the way, that 30,000 should be lined up with 28,000. Okay? Okay, now Ms. Toomey said we should look at non-current liabilities, and we just did. We only had one of them. And then she said stockholders' equity items. Okay, and we had common stock. And we have the common stock account already up here. The only portion that deals with cash is the 20,000. So I'm going to put here issuance of common stock 20,000. And that should be positive, right?
Mm-hmm.
And then we have retained earnings. The 130,000 of net income is already included here. The only part we got to worry about is the 105. And how would you describe this?
Cash dividends paid to,
Cash dividends paid, or payment of cash dividends, right? $105,000,
uh-oh.
and that's negative. So 105 plus 30 is 135, it's a negative 115. So what are we gonna call it? And we gotta put that on line by itself, because we gotta label it. Net cash used by financing activities. Okay, now what are we supposed to do? Combine our three answers. Somebody please take 151,250, subtract 28,000, and subtract 115,000.
8250.
8250. Is it positive or negative?
Positive, so it's an increase.
8,250. Okay, now watch this. I'm gonna call that change in cash during the year. Then to that, I'm going to add cash at beginning of the year. So go to your 2016 year-end balance sheet, which would be your beginning of the year 17, and it's 20,000. So then that would be cash at end of the year, I hope is 28,250. Is that what it is on the 12/31/17 balance sheet?
Yeah.
Okay, when you get to that, watch this. I'm gonna put a dollar sign here and double rule, because I feel good about myself now. All right? Now look up here. How many dollar signs do you see? You see a dollar sign the first time you put a number in a column and for the answer. That's it. Should have been taught in 371. You don't put a dollar sign by everything. And you don't ever put a dollar sign in a journal entry. Some of y'all go dollar sign crazy, and then you can't finish the test because you had to put in 400 dollar signs in your exam when you shouldn't have put one. All right, so since that balanced, or since we got the answer we wanted, then I think we're probably pretty safe. So now we have to do C, which is the first section on the indirect method. So again, I still gotta have a heading. Cash flows from operating activities. And under this method, we begin with net income. And my net income, I remember from the T account for retained earnings, is 130,000. Then I'm gonna make a series of adjustments. Okay? So, my abbreviation for adjustments is ADJX. Adjustments to convert net income to net cash blank by operating activities colon. Now, I don't have it on the board still from Tuesday, but what was the first type of adjustment that we had listed in our chart? Non-cash income and expenses. So look at that income statement. Do you have any non-cash income? Do you have any equity method income?
Accounts receivable. Wait, I'm kidding.
Okay. You don't have any equity method income, so we don't have any non-cash income, all right? Do we have any non-cash expenses on our income statement? What?
Depreciation.
Depreciation expense.
I'm tired. It's been a long week.
And it was 25,000, 75? 25,000. Okay, now watch this. New column, new dollar sign. And we're adding it back, so that's a positive number. Okay, what was the second type of adjustment we were supposed to make? Gain and losses on asset sales. Look at your income statement. Do you have gain on sale, loss on sale of anything? So we don't even have to do that. What's the third type of adjustment?
The change in accounts receivable.
Change in current assets.
Sure, current assets.
Change in current assets. So go to your balance sheet. And remember, we're trying to explain the change in cash, so we're going to skip over cash. What's the next one? Accounts receivable. So what was the change? And remember, it's a change in accounts receivable net under the indirect method. We don't have an allowance for doubtful accounts, so it doesn't matter. 75?
17.
17,000. And did it go up
Yes.
Yes.
or did it go down?
It
Went up.
increased.
So accounts receivable going up is cash going
Down.
down. That's cash you did not collect, so that's a negative adjustment. Look at your balance sheet. What is the next current asset? Inventory. Okay? So change in inventory. What's the dollar amount of the change in inventory? Is that 30,000? Did it go up or down? Down. So if an asset goes down, cash goes up. So add it. Do we have another current asset?
Prepaid expenses.
Prepaid. So change in prepaid expenses. And that was the 2,000. Okay? It went up or down? Up. An asset going up is cash going down. So that's a negative. Are there any other current assets?
Nope.
Okay, now let me stop for a minute. See, if you had been drilled in 371 the way you should have been about the format of a balance sheet and what's current and what isn't and non-current and what they're made up of, then this would be owed. I mean, what if I didn't give you total current assets, just gave you plan assets after that? Would you be able to figure out which ones are current assets?
Now I could.
Well, that's the whole idea. It shouldn't be in the second intermediate class before you finally figure that out.
Agreed.
But I can't do everything. So, my point is, the reason I emphasize the sections of a classified balance sheet is because it's important. It means something. You need to know it. Because some of these problems, they gave you the trial balance with just debits and credits. And you think about it, you get a job and you go to work, are they going to give you the balance sheet and tell you to prepare a statement of cash flows? No, they're going to give you a trial balance and say, go for it. Prepare the balance sheet, prepare the income statement, and then prepare a statement of cash flows. Oh no, I need you to give me something that's got current assets on it so I know what's what. No. Okay? So what's the last of the four types of adjustments? changes in current liabilities. So go to your balance sheet, since it's nicely broken out for you. What is the first current liability?
Accounts payable.
Accounts payable. What's that dollar amount of change? 8,000. Did accounts payable go up or down? Up. So a liability going up is cash going up. So that's positive. What's my next current liability?
Salaries and wages payable.
Okay? And I'm looking for the change in salaries and wages payable. And the dollar amount of that change was $24,750. And that was a liability going down, right? So that's cash going down, therefore this needs to be negative. And isn't there one more? Interest payable? Change in interest payable.
It's 2,000.
What did it do? Did it go up or down?
It went up.
Up. A liability going up is cash going
Down.
up. So it's positive. Okay? So now we need to add our 1, 2, 3, 4, 5, 6, 7 adjustments.
21,250.
Huh?
21,250.
21,250. And is it positive or negative? Positive. Okay, everybody with me? And so then 151,250, and I go back over here and look at my other one, and it was 151,250. I'm feeling so good about myself, I'm gonna have a drink after this.
I'm gonna have to look.
And gonna label that net cash provided by operating activities. Questions? Okay, get all that written down, then I want to talk to you for a second. Okay, look up here. Do you see the change in inventory? 30,000 and it's positive. Well, over here we subtracted. No wonder you can't figure this out. It's just hocus pocus. It's just make believe. You can't figure. I mean, there's no way to figure it out. It's just luck. You're just lucky if you get it right or not. I have students say that's confusing because sometimes you add it, sometimes you subtract. I don't understand. Well, this is cash paid to suppliers. And that's not cash you paid. So I'm subtracting it from cash out, which is the same as adding it in, right? What am I doing over here? Adding it in. So it's not, unfortunately, students like to say, okay, we always subtract it. Oh, we always add it. No, you read what the words say and you do what the words tell you to do. Use your mind. You're not a marketing major where you don't have to have a mind. You're accounting majors. So, when students tell me that, it just drives me bananas because that means they're just used to memorizing little shortcuts to get all the way through life. And unfortunately, that's not the way life is. Once you get out of high school, obviously, and some other courses around here. You're gonna have to start using your brain. So sometimes, I admit, some of those are positives, but yet over here they're negatives, and vice versa. But if you go back and think about what the heading over here is versus what that one is showing you, you should be able to reconcile the difference between the two as making sense to you, is my point. Questions? You're saying, well, yeah, I was just about to ask that question. I'm glad you said that, so I didn't have to ask that. All right, problem 8. How'd you do? Did you get it?
They just, they had a few bad debt expense using the allowance account instead of, net. So that was the only thing I was like, well,
Okay.
that was just different. And I guess that's how you want us to do it, because it said something like bad debt was in the operating expenses.
The allowance for doubtful accounts. That's your contra accounts receivable account. And it had a balance at the end of 16 of 8,000. And at the end of 17, 10,000. Everybody with me? And then I'm guessing, because of what she just said, bad debt expense, they don't tell you how much it was. Okay, well, let me ask you something. When you created this 8,000 credit to begin with, what was the journal entry? Okay? And then they tell you in whatever that item is, number 5, there were no write-offs of uncollectibles. So how much was bad debt expense this year? 371, 211. If you had had write-offs, what does that journal entry look like? So there would be something over here. But they're saying, no, there wasn't any. They would have to tell you how much was written off, or they would have to tell you how much bad debt expense is. You can, if you're given 2 of the knowns and you only have to solve for 1, you can do that. You can't be not given all 3 of them. Or just given 1 and expected to solve for the other 2. You can't, it's impossible.
That's what you didn't have to net your AR at that point, because you were accounting for it there. When you were doing the indirect is when I was like.
So, what did you get as cash? Let me go get my solution, because I don't even have a solution. See how close you are.
Oh yeah, I took all my solution. I took all my solution.
Okay.